Welcome to FinanceFeeds Podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. Hey everyone, welcome back to FinanceFeeds Podcasts. This is episode 19. My name is Nikolai Isayev. I'm editor-in-chief of FinanceFeeds. Joining me today is Sam Lowe, who is CEO and founder of LiquidityFinder.com. Sam, thanks for joining our podcast today.
Well, thank you for having me, Nikolai. It's a real pleasure. Thank you. I feel honored to be here.
Pleasure's all mine, Sam. I wanted to start off and ask you about LiquidityFinder.com. I see that the website was recently relaunched with new tools, functionality, and other things. Can you tell our audience the idea behind this project, how Liquidity Finder came about, and which segment of the industry the website caters to?
So Liquidity Finder went live in 2018. We had 5 companies on the site to start with. Now, the idea behind it was that when I was at, first of all, Integral and then First Derivatives, selling the FX dealing technology that they both provided to the market, the market was going through a series of quite significant changes. So at Integral, as an example, prime brokerage was very, very cheap, and it was offered by, there was a race almost to the bottom in terms of the pricing from PBs that were trying to attract retail FX flow from significant retail FX brokers. That then took a sharp turn, a little bit like interest rates have done over the last few months, took a sharp turn. The price of prime brokerage suddenly increased because I think people were aware of the risks that were involved, especially after things like the Swiss National Bank removing the peg and other market events that were more specific to individual customers and so on. So the prime brokers started stepping away from this market and offboarding clients to their institutional brokers. And I was getting calls from people fairly consistently saying, which PB can I use? Which institutional broker can I use, or prime of prime? Or there may be more specific questions like, I need to get a larger ticket done in gold, and I want pricing out of Tokyo, and I want no last look on 50 million clips for my trade following software, and so on and so on. And these questions were fairly constant and consistent. Now, I was aware that the retail FX market, there are lots of comparison sites, but there wasn't really anybody providing information on the institutional level of the market. So the one step above the retail market and one step below the bank market. And it was one of those things that kept me awake at night. If I didn't do this, then somebody else would do it. And I suppose being a bit foolhardy and always wanting to set up my own business at one point or another, it seemed like the thing for me to go and do. And I asked a few clients whether or not they would be interested in joining. And of course, they said yes, because who wouldn't want more clients, basically?
Sure.
Especially as the initial offer was, when you've got a platform with no traffic, you can't start charging people immediately. So it was a bit of a free ride for the first few names on the site. But as the business got more traction and got more visitor traffic and so on, then the new names that came on were paying a monthly fee. We now have something like 30 names on the site, but there was always the idea of creating an environment where the crowdsourcing information was always something that was in my mind to do. And you can't do that on a website which is just a flat comparison site with no interaction between the actual users. So it was always part of the idea to have a website which allowed people to create accounts and share information. But secondly, I had quite a few inquiries from existing customers saying that they would like to self-publish their content. If they've got a news release, or if they've got some change to their instruments that they're offering to the clients, how can they do that on the existing site? Well, they couldn't. So we collectively, when I say we, me and my developer, we got our heads together and decided to go down this path of effectively creating a new social networking site, which you could say is LinkedIn, but focused on the financial markets. A big ambitious project. Spent the most of 2022 working on that and launched it in December 2022. And when you relaunch a website, you kind of lose all of your SEO rankings and all of that stuff. So we started back at the beginning in December, but I think we've fairly got back to where we were before. So we're first page of Google for certain search terms which are important to this industry, which is good. But the idea was to provide a more rich environment for our customers, and also to get to know our customers a little bit more. Who are they? What are their needs? What are they looking for? What are their opinions on things? And if they can share their opinions with the rest of the audience, then that there's more added value for everybody in that type of relationship that we will have with our user base. So
Yeah. hmm Yeah, Sam, I totally agree with you. I think it's a great solution for a particular niche within the global financial services industry. I wanted to talk about some of the specific tools that Liquidity Finder has today and their benefits for users. I'm sure you've had quite a bit of services and tools rolled out in September of last year. Like, for
yeah.
example, I saw that there is a jobs board on Liquidity Finder. Perhaps you would like to give us a
Yeah.
few insights.
Okay, I'll come back to the jobs board in a minute. Now, I think the most actively used tool on Liquidity Finder is the matching tool. We call it the matching tool. So, effectively, a market user, which could be a retail broker, professional trader, a bank user, hedge fund, asset manager, they may be looking for a specific asset class to trade out of which data center, what the size of the deposit is, that could vary. If they put all their criteria into that tool, then we shortlist um, the brokers that can accommodate their requirements. And that process starts when we onboard a liquidity provider onto Liquidity Finder. So we send out a standard set of questions to everybody. They respond with the values for each category of question that will be asked in that matching matrix. So it's really down to the brokers themselves to say what they can or cannot do. And so it kind of saves the market user, let's call them a retail FX broker as an example, phoning around 30 different brokers to ask them the same question again and again and again. So that's why we came up with that particular tool. And if the tool results in 3 or 4 names out of 30, then it's pretty specific. The user, of course, is then able to phone up those 4 brokers themselves and have a detailed conversation with them, or they can use the follow-up part of that tool, which is send an email to each of those 4 brokers with the same question, and see what the responses are, and confirm whether or not they can have a conversation about pricing and spreads and other conditions to then move ahead with a relationship. What we're kind of doing there is saving people a lot of time, and also if you get 4 or 5 conversations going with brokers. At the end of that process, you will end up with perhaps the most competitive business relationship that you would probably not have had if you'd gone round to 1 or 2 brokers, struck lucky with them, and not pursued, getting comparison quotes from the rest of the market.
hmm
So that's the tool that's used 1, 2, 3 times a day. It's great to see that out there, that people are aware of it, but people are using that fairly actively. There's another form which people can complete, which just explains it's almost like a help me type form, which a user can come along, say they're looking for a particular asset class, they're based in what territory, they're looking for a relationship based on a certain amount of collateral, and they can be a bit more specific about their requirements and send that to as many brokers as they see fit from the list of brokers on Liquidity Finder. So on page 2, they can actually deselect the brokers they do not want that inquiry to go to. Now, the reason for that is they may already be, of course, in a relationship with 1 or 2 brokers. They might be shopping around trying to find something that's a bit of an improvement on their current business relationship. So we've made that tool selectable in the sense that they can choose which brokers they want to send that inquiry to, and perhaps then break up with who they're currently working with and get them. And that has happened a few times, and we've actually managed to help people. I put a post on LinkedIn about this last week. We've actually helped recently a broker reduce their costs very significantly using that tool. So I would encourage more brokers to use it. It's there, and it will save you an awful lot of time, and it's all free, and I will help you if you have any questions. And there are 30 prime brokers out there, or 30 institutional brokers desperate for business. I would say desperate for business, but very keen to get more business, of course.
hmm
It is a bit of a dog-eat-dog world. They will be taking business pretty much off another competitor, but that's just the nature of this game. But we've made the tools available to help people find new partners.
hmm Well, Sam, I think it's a great tool because, like you said, it saves people a lot of time. It's also it doesn't necessarily have any immediate obligations for the person who's searching for better prices or better terms, right, for the business relationip.
Correct.
Like
It doesn't lock
like
anybody
you
in.
said, like you said. So it alleviates a lot of the traditional sort of delays and things like that that we're all used to if you're sending someone, um, an inquiry via email, for example, and trying to shoot out such requests for a number of firms, and then waiting for or hoping for someone to reach back out to you and discuss
Well, yeah, I agree. I mean,
details.
quite often what I find is that people might know, uh, ABC provider is a great liquidity provider, but they don't know actually who at that firm they should be speaking to. They don't know what the phone number is. They don't know what the email address is. But if they come to Liquidity Finder, any inquiry goes straight to the person who will be the person to deal with that inquiry from a potential client. So it doesn't come to Liquidity Finder; it goes to the brokers themselves. I think that's a point worth making.
Hmm.
Goes directly to them, and they see it instantly. So definitely worth using that to save time. The other tool that we can sometimes get involved in is we've got a form where people can explain their business, explain their current setup, what they're looking for, and I'll help them go through the process of maybe selecting a broker. But again, for free. I'm trying to add value to both sides of the equation here, both the user and the provider of liquidity. The time it takes for me to do that is time well spent as far as I'm concerned, because I get to know more about the market and I get to know more about the liquidity providers and what their capabilities are, and they're delighted to have these kind of conversations. So I'd encourage anybody to do that as well. So moving on to other tools that we have, we've got market volumes data, which is very actively monitored month by month. So people from all ends of the market come to see what the various platforms are churning out in terms of ADV each month. And I have a suspicion that some people might use that as a proxy for their own business. So if your retail brokerage is in line with the volumes that the major platforms are doing in terms of percentage increase or decrease, then you're kind of in a healthy state with the rest of the market. If you're outperforming or underperforming, then you've got some tools there that will help you check up on that. I
Hmm.
will say that you have to be registered to get that information, so you have to create an account on the site. But it's a small price to pay. It takes about a minute to create an account, and we'd love to have all of those users in our community. So that's another tool that's very, very actively used. And we will be beefing that up very shortly. In fact, we've got some conversations going on with some other data providers where we'll be providing more tools along the lines of not just volumes but also price data as well. So watch this space on that.
Hmm.
And then to come to the jobs board, we've got knocking on the door of 10,000 jobs on the site at any one time. Almost 100 companies on there. Every company that's listed on Liquidity Finder gets free job postings, and we can set up a link to anybody's jobs board and take those jobs in automatically, and they get posted the same time they get posted on the internal jobs board. You don't actually have to be registered on Liquidity Finder to see those jobs, but you can create alerts and a personal profile on the jobs board to receive any jobs that might meet your criteria. So that's
Hmm.
another tool that is available to people who are using the site, but also people who are publishing their business on the site as a liquidity provider or any other service provider. They get free jobs as a part of the package of being on the site as well.
Hmm.
Uh, and that's obviously well used as well.
Well, because you have insights into what kind of jobs are being posted on Liquidity Finder. I was going to ask, kind of, what's your opinion on the state of the job market in the industry today? Are people still being constantly recruited, and kind of um, based on what you see, are we seeing a healthy sort of demand for hiring in the industry?
Well, that's a really interesting question. I've been looking at this. Obviously, I look at this with uh, a very great amount of interest because I like to see the number of posts on the board growing. And interestingly enough, with the same consistent number of companies over the last, I'd probably say month and a half, 2 months, I've seen the volume of jobs being posted actually increase by about 10-15% from
Uh-huh.
the same company. So it seems like more companies are hiring. And also, kind of to get into that a little bit further, crypto companies themselves, I thought were on their way out probably 6 weeks, 2 months ago. And they have been, I suppose, the beneficiary of the broader market instability. Crypto is having a bit of a renaissance. People are having more confidence in it, I suppose. as they're losing confidence in the traditional markets or the banks, let's say, to be a bit more accurate. Um, so the crypto jobs uh, opening seems to have risen by about 10, 15, 20% in the last month. So I think people are beginning to have a little bit more confidence in that space. So on the one hand, we're looking at an unhealthy market where people are maybe leaning on crypto as a safer haven, which is great after the crypto winter.
Hmm.
So that part of the market seems to be very healthy. But there is a steady growth in jobs from traditional brokers who seem to be recruiting consistently. Liquidity Finder clients are posting consistent amount of jobs each month or each day, I should say. So I see a healthy industry. I don't see much sign of massive cutbacks yet, unlike in the broader software industry.
Hmm.
But
Well,
maybe
I,
there's
I
more.
think I think sort of the broader FX derivatives industry, we could say that we may be experiencing a boom of sorts in just in terms of market volatility, right? And everything that's
Absolutely.
been happening in the market. So hopefully, the retail shops are generating good amounts of revenue from trading. And also, if you take a look at things like CFDs Weekly, it looks like quite a few brokerages are taking advantage of interest rates themselves in terms of their
Yeah. Yeah.
revenue generation for their firms.
Yeah. I mean, shout out to David Kimberley. This week's article about interest rates, very timely and very interesting. And it's been a long time since we've been able to have that kind of conversation. Probably 5 years ago, people were saying, there's no volatility, market's really dead. And then now look where we are now.
Sure.
We've had 2 years of quite wild stuff, and it's not going to get any quieter for quite a long time. But yeah, interest rates are positive as well as a negative. So I think there is a healthy industry. I mean, people are always looking for volatility because you can't really make a huge amount of gain in a flat market. And then, but there will be some who will get caught out by this. That's fairly inevitable,
Hmm.
unfortunately. But yeah, I think volatility. There is obviously a correlation between volatility and a kind of a healthy industry for trading.
Yeah, and that sort of brings me to my next question. You mentioned your extensive background, in FX and derivatives. You've held positions at Integral, CFH Markets, which are now known as Finalto,
Right. Yeah.
as well as First Derivatives and Bloomberg. I wanted to actually get your personal opinion on where we are today in terms of institutional offerings for FX and derivatives. Because again, you have a very deep knowledge of this, and again, you are looking at what kind of solutions different market participants are looking for today. I guess in your view, has the industry been able to successfully tackle challenges over the years? Like, for example, you just mentioned, there was a long period of very low market volatility. Now we're in a period of hyper market volatility. What kind of challenges has the industry been able to tackle over the years, and what challenges remain today? Sort of, what can we expect for the future?
Well, it's a very good and broad question. I think there are consistent themes in the market that will always be there, and consistently over the years, people are looking for efficient execution, reliable execution, tight spreads, and so on. And I think there certainly was a proliferation of market makers in FX space and certainly crypto. So I don't think the loss of any individual name is having such an impact as it might have done 10, 15 years ago.
Hmm.
Um, so in that sense, there's more dispersed liquidity around the market, and I think the appearance of peer-to-peer platforms, like Colin Lambert has recently pointed out, could be something that we might see more use of, rather than bilateral relationships in between single bank platforms or non-bank players into aggregators. Maybe, and it's about time, quite frankly, that peer-to-peer FX trading really should have its time in the sun because the technology is there, and why should a certain concentrated number of market makers really dominate the market? I think we should see, and it would be good to see a greater dispersal of liquidity amongst the players, because effectively that's what the crypto market is. The crypto market is much more dispersed than being a centralized FX type environment. you could say that Binance, being the world's largest exchange, probably does dominate the market. But on the institutional level, I think there's a lot more kind of peer-to-peer type trading relationships going on. I think there'll be more of that in the FX world. Um, so I think there are consistent themes in the market, and everyone's always trying to get tighter spreads, more reliable execution, and I think technology has come a long way. And I think in terms of the execution speed today compared to what it might have been 15 years ago is very, very, very much more improved. Um, Trade analysis tools as well. There's a proliferation of those things like companies like Fair Exchange, TradeFeeder, and others are allowing clients to see what their execution is like from their client LPs or their customers. And I think that will tighten up the industry in terms of behavior. The move towards people signing up or being a member of the FX code, global code, and it's almost becoming the norm now to be on FX global code. I think I've seen companies, and we have one of the criteria for, not criteria for listing on Liquidity Finder, but one of the fields that we ask for when we onboard a client onto Liquidity Finder is, are you a member of the global code? And surprisingly, there are names that I'd never have thought would consider it now being part of that. So it's almost like default, and it's going to be the norm. And if you're not part of the global code, you're going to look a little bit like you're turning up to a fancy dress party in normal clothes, sort of thing. You look a little bit like the odd one out. So the market obviously remains resilient on the whole. There was a huge amount of volatility back at the beginning of COVID, a huge amount of volatility. The market was very, very reliable and stable through that, very impressively. No one really fell over at that point. I mean, if you look at the spike in volumes go to Liquidity Finder's market volumes history and see what the market volumes were back in early, 2021, when things really started locking down. Mm-hmm. The market sailed through that without really any problems. And I think that is testament to all the technology people out there that get this technology right in various banks and the various technology trading platforms. Nothing really went wrong. And shout out to all of them, because it's a huge achievement. So I think there are challenges that will always be there in terms of reliable execution at a fair price. Markets kind of moving much more towards a global code, which is fantastic. The major spot FX platforms themselves are now making it almost a requirement that you have to be a global code signatory to participate, which I think is a great thing, and the industry is going to benefit from it. Mm-hmm. We just need a global code now for the crypto industry, mm-hmm. Which perhaps the next chapter of all of that.
Yeah, I think you mentioned Colin. Let's give a shout out to Colin Lambert from the Full FX. He does a lot of he covers the topic of the FX global code quite in depth. I actually wanted to ask, in reading some of his thoughts and and opinions on the subject, and like you said, Sam, there are quite big sort of industry players. I'm not going to name names, who have adopted these proposed changes and are using them. Some of them are using them across their entire client base. Some of them are at this point using them with specific segments of their client base. If we say that the adoption of the standard, I'm calling it a standard, right? The FX Global Code, a standard that everybody should adhere to. If this really does develop into an industry-wide standard, is there room for players that, for some reason, whatever that reason may be, don't want to participate? Don't want to be signatories to the FX Global Code? And if those kind of market participants do exist in the future, will they have an opportunity to continue? You know what I mean? To continue trading? Or, I mean, this is based on my limited knowledge of this space. So I'm looking to you as an expert
to
kind of comment.
The global code has done a good job of maintaining the momentum to get people signed up to it. And I think really the key has been in the last few months when the major platforms themselves have made it compulsory to be a member of the global code to actually participate. And I think that's really added to the momentum. Are people still going to be able to trade FX if they're not global code signatories? But who would want to trade with them? Quite honestly, it's a bit like going on the dark web. You're going to get burnt. It's a bit like retail FX brokers who operate in unregulated territories,
Uh-huh.
I still do not quite understand why somebody would choose to trade with a retail FX broker in in an unregulated territory where there's no fallback for the client.
Hmm.
And where I would like to see the global code going, and I'm sure others would as well, is down to the retail broker level. How does that happen? I don't know. Let's get all the institutions on there first, and then the pressure from above will hopefully tidy up the industry at the retail effects level. Because
Hmm.
quite frankly, some names or some news stories that we hear about give that part of the industry a really bad name. And it undoes all of the trust that people who work very hard at regulated brokers put
Hmm.
in to keep their name sound and to keep the trust of their clients. So I would like to see the global code move to retail FX brokers, and some retail FX brokers are signatories to the global code.
Hmm.
Uh, and I think it should be part of any retail client's due diligence to make sure that they're trading with, first of all, a broker that is regulated, and secondly, ideally, one that's observing the global code and the behavior that that implies for them as well.
Hmm.
Uh, I'm not sure if that answers your original question.
Yeah, no, I think it does, and I wanted to just follow up and say that uh, in my mind, when looking at the standards in the FX Global Code, there's nothing there that is not beneficial to all market participants. In other words, this is not something bad. This is all universally good for everyone, for
Well,
all market
absolutely,
participants.
absolutely. Unless you have uh, been profiting significantly from the ability to last look and try and get a better price from a client's order,
Hmm.
and not fulfill the execution perhaps fairly to your own customer. But that's what this is all about: is trying to clear that up.
Hmm.
Uh, but as I said, on an institutional level, so we need that to be implemented on a retail broker to prime broker or retail broker to prime of prime level, from the retail broker's behavior point of view. So retail brokers, either they have the same global code that the institutional market has, in the interbank space, or there is a separate global code for retail brokers where they may have different obligations. But it needs to be self-regulatory, and it needs to be made um, very obvious to the retail brokers or the retail broker clients
Hmm.
who has good behavior and who has bad behavior. You can't trust not autopilot, trust pilot reviews. You can't trust necessarily Forex Peace Army reviews because people can pay to have their competitors slagged off on those environments or pay for good reviews or whatever. But what you cannot really get away from is being independently audited to upholding the requirements of the global code.
Hmm.
So um, it's one down from being a legal requirement, but it's the next best thing. But if you're regulated, then that's more than the job done for you. But also you need to not just follow the regulators' requirements, but also the behaviour of your um, um, your uh, interaction with clients and follow a particular standard that everybody else is now following, being the global code. So I'm a big proponent of it, and I think it's great that's made a lot more progress over the last few years. And Colin Lambert, big shout out to him and um, others for promoting that as something that a standard for everyone to follow.
Hmm. You bring up an interesting point to possibly have sort of a standard for retail FX brokerages and sort of their responsibilities to their actual traders and customers, because there's certain things being done within the retail trading industry where either some brokers are proactively trying to show their traders with a sort of independent analysis that takes place every month that they're providing them in general terms they're providing them um, generally good or actually better than good execution, right?
Yeah,
If we can if we can sort of qualify or quantify the data. And then there's companies out there, at least for a certain period of time, that we saw that were providing traders with a very sort of easy to use browser-based tool where they could select a period of time in the past, down to the second, I believe.
or
Um,
millisecond actually, I believe.
or yeah, or perhaps millisecond, and you could choose the actual product that you were trading at your retail brokerage, and you could actually look up the execution prices that are amalgamated or were taken from many different sources of pricing that were available on that day, on that specific minute and second, and you could essentially compare. where your trade was executed and based on the market, quote unquote, right? That is being calculated or presented to you. So it's a some good gauges out there, both automated and manual, for retail traders um, to really see what are they getting in terms of the quality of the
Yeah,
pricing and their execution. But I think ultimately, I agree with you, Sam. There is room to grow from this perspective. Perhaps there will be something in the future where, again, all sort of retail brokerages globally who are regulated or are in regulated jurisdictions that can sort of apply a universal standard where any trader of any of those firms can easily go and check
yeah,
what the generally accepted, let's say, price was at a particular on a particular product at a particular point in time.
yeah. I mean, there needs to be a greater proliferation of access to those tools for the end user. Now, I occasionally have got complaints from retail clients that come to me asking for help. I mean, they must be, um, you know, pretty desperate when they get to the point where they can't get a positive response from the brokerage they're working with. They have to go around to other websites to try and get some help trying to communicate their issue clearly to their broker. Let's not forget the Financial Commission actually, and the role that plays, and maybe that is the thing that's self-regulating the industry at this level compared to the global code. I think that does a good job, and there is correct me if I'm wrong, Nikolai, but there is an almost voluntary sign up to that, and people are not compelled to sign up to the Financial Commission. It's a good job they are, and it benefits them because it makes them look like an attractive brokerage for somebody to do business with. So um, I'd forgotten about that actually when I was talking about the global code, but I think that is filling a gap that certainly the industry needs in the sense that it's becoming self-regulatory. And I think the um, ability for clients to check the honesty of their broker and the execution is absolutely required, and it should be very accessible for a retail client to be able to put their trade in, compare it with um, a market consensus, let's say, like a fair value price for a particular instrument at a particular time, and see if they're being treated fairly. And that should then also regulate the industry because people will move away and they'll vote with their feet. They'll move away from those brokers that aren't fair,
Hmm.
fairly executing them.
Hmm.
Um, but this gets down to the question of every broker pretty much treats every client with different conditions based on the behavior of that client. So some clients may be offer fairly challenging flow. Some are very soft.
Hmm.
But a broker is certainly within its rights to adjust their response to trading based on the nature of the flow they're receiving. So there's not one size fits all, and I think that's a fairly accepted generalization in this industry that any either institutional broker pricing into a retail broker or a retail broker pricing into its clients will adapt its pricing based on the behavior of the client underneath them.
Hmm.
Uh,
Hmm.
Generally speaking, I think there is a lot of um, uh, areas of the industry, especially in the unregulated offshore entities, that does need cleaning up. And I think retail clients that have problems over there should be able to check the validity of their execution against an independent source. And if they find things are not as they should be, then they need an outlet, which is either ultimately getting their funds out of that broker and then moving that elsewhere. And
Hmm.
if that fails, and for whatever reason, then they can come to people like the Financial Commission to try and help out. Or just don't go to those type of brokers in the first place. Stick with regulated entities, and ideally those that follow the global code, very openly. So
Hmm. Hmm. Yeah, Sam. No, I wholeheartedly agree with you, and you are correct in that. Organizations like Financial Commission and really some of these tools that I was speaking about that retail traders can use. Or brokers can provide to them. They are obviously all voluntary in the sense that nobody's forcing anyone to use this today. But like we both said, they are valuable tools to keep in mind for the future if companies more broadly in the retail space want to take a look at them and possibly want to um, adopt them for their client basis. Sam, I know we sort of touched upon some of the challenges that the industry has gone through over the last couple of years. I wanted to speak specifically about sort of the situation right now. We've had three major themes playing out since the end of 2022. We've had inflation, interest rates, and we had geopolitical risks. We now arguably have a fourth major theme, which is a banking crisis. All right. We had a situation in the United States. We had a situation in Switzerland. It seems that things have not, or sort of the worries in the markets have not necessarily died down. I've also heard sort of from institutional players that cater to different regions around the world that, in the beginning of 2023, there was a massive influx of demand for emerging markets, FX trading and currencies and liquidity, specifically Asia as well as Latin America. I was wondering if you sort of have any insights into these sort of the change in demand from institutional players, maybe retail players who work with Liquidity Finder, in terms of if there's any sort of shifts in demand going on, particularly right now as we see a lot of these themes playing out.
Yeah. Well, I mean, we're in a very interesting time. Very interesting time. So basically, we are dealing with the effects of the Fed being very slow in responding to its own problem that it created with very loose monetary policy for far too long. And in a way, it's like a bit of a parallel can be seen with the response to COVID. Some people say that Western governments, based here in the UK, I thought that the government responded very slowly to COVID, and then when it did respond, it responded very hard and very quickly. But it took a long time for that action to happen. A little bit like the response to inflation, the Fed's left it a little bit late, and it's now run away, trying to catch up with itself, and it's perhaps accelerating interest rate rises perhaps more than it needed to if it had acted a little bit sooner. So that is causing a lot of unknown or unexpected shocks in the market. I mean, who would have thought SVB would have had this problem? Maybe they didn't respond themselves fast enough to the signaling that was coming out of the Fed. I mean, one thing you could say is that the Fed was signaling that it was going to raise rates for quite a long time before it did so, and it was certainly on the cards that it would raise rates sharply when they did start doing that. And maybe some banks didn't heed those messages enough, and there is obviously a bit of fallout now with SVB as an example. But how far and wide does that go? I think that's what everyone's concerned about. Is this going to affect more banks than just SVB and the other banks that begin with S, who I can't remember right now who they are, but Credit Suisse being another. I think Credit Suisse, there was always a lot of rumor and speculation that there were some issues there. But you could say that about any bank, especially rival banks to your own. Deutsche Bank last week was in the spotlight. I think that's really more speculation and tongues wagging than any real problem there. I think things have really calmed down this week. But where is this going to go from here? What we do see, obviously, is a spike in precious metals and crypto. I think that's been the most obvious response. That I've been quite surprised by how much people have moved back into what was considered 3-4 months ago a very speculative and very dangerous environment, being the unregulated crypto market. People seem to be flooding back into that now. Is that a direct consequence of the lack of trust in banks? Maybe, I don't know, but it certainly seems to be correlated in the sense of the volume. So that could be one change that we're seeing. Second change is, I'm not so sure from the customer's point of view. The requests for emerging markets aren't so overt. So we don't see on Liquidity Finder people saying necessarily, Sam, I need specific non-major pairs. But what I am seeing, talking to providers of those instruments, that they are seeing a massive uptick in business and a massive amount of interest. And there'll be an article on that coming out from us in the next couple of days, hopefully.
Oh, cool.
One name in particular. So a big rise in interest in NDFs. I think that's one thing I think we're going to be seeing more of this year. But yeah, I mean, we just need to put our hats on and on our seatbelts, and let's just try and get through 2023 until inflation does come down get under control again. But I think what we're going to see is interest rates going above inflation before we actually see any massive impact that interest rate moves are having on the market. And so I
Hmm.
think we've got a fair way to go yet before we see the end to that. And what damage or what impact that's going to have on other names in the market, we just don't know yet. We don't know what's going to come out of the woodwork, but we just need to buckle down, I'm afraid. And let's just hope we can get through it.
You mentioned NDFs. That's an interesting topic. NDFs have been around, as far as I understand. NDFs have been around for a long time.
Yeah.
They've only become popular and prevalent in the institutional space. Um, I would say, in my mind, only the last few years. Again, as there has been increased risks in the market and firms needing to manage that risk. Right? I mean.
Well, not only that, I think the technology has made it more possible to trade NDFs.
Hmm.
And it depends which part of the market we're thinking about. Now, right now, I'm thinking about the retail brokerage side of the market and the proliferation of the ability for example, pricing to get through MT4, MT5, through the network of bridges and so on. And so obviously, starting with liquidity providers. So I think there's going to be an
Yeah.
uptake in terms um, of retail demand for that. But let's not forget that every retail broker is in an arms race with its competitors, and they've got to come up with a new shiny toy for their clients to play with. And recently, that's been 0-day to expiry options.
Hmm.
We've seen a massive uptake in that, and then the next thing could be NDF. So if one broker can offer access to the NDF market and others can't, they've got an edge for a while. Inevitably, others will catch up with them. And I saw that with the crypto space. Everyone wanted suddenly 3 or 4 years ago they wanted crypto pricing. Now it's
Sure.
almost standard, and there'll be a point where NDF pricing is fairly standard across the market too.
Hmm.
Um, we're seeing more participants in the NDF space, and technology and prime brokerage is allowing that to happen at the institutional level. And there is now the technical ability to get those prices down to the retail trader level, let's say. So I think yes, we'll see more NDF activity.
Hmm.
Um, yeah,
Options is also something that's growing quite significantly, especially here in the United States, and I think in some parts of Europe, retail options trading is really booming, and it looks like this might be the next asset class. Like you said, 4 or 5 years ago, firms were demanding crypto pricing and execution. Now, options is one of the next big things
yeah,
again in terms of massive retail adoption.
I totally agree. And everybody wants the next new shiny thing,
Hmm.
and we have to be very, very careful to distinguish between binary options, which were, generally speaking, a scam, and options where people are taking let's take vanilla options as an example, a view on the market, and they can be used as a hedging tool. They can be used as a speculating tool to leverage up even further than perhaps just having a CFD. They're very exciting instruments, but they need to be treated with a lot of caution. Um, and if you want to get more involved in that space and get more esoteric type structures, then at an institutional level, you can get bespoke options that can really act as a decent hedge. Let's say when you're trading FX, companies like Assure Hedge can offer solutions like that, super derivatives with their pricing tool. And I'm sure there are many others which I can't remember right now. But
Hmm.
on a retail level, I do think options will be the next big thing because I'm hearing, first of all, more technology being available for that from effectively white label offers, and retail brokers themselves are beginning to ask questions about where they can get options pricing from.
Hmm. And the options market, something again, the electronic options market has been around for many, many years. We can just thinking of SIBO, right, out of Chicago.
Yeah,
I think they're celebrating their 50th anniversary this year, actually. So, I mean, options trading, the availability of options trading has been around for a very long time. So definitely an interesting space to look at for
yeah,
the future.
it's almost part of American traders' culture. Options. It's not so much
Hmm.
in this country, and I'm pretty sure it is in places like Holland as well. But it's not necessarily in the UK yet, and it's certainly not in other parts of the world in emerging markets. So. They're very sophisticated instruments, and they need a little bit of understanding before people start attempting to use them. But it's not part of the general culture here, and I do believe so over there. Nikolai, correct me if I'm wrong, but it's fairly common for people to trade options on a retail level. Am I right?
It's becoming more and more popular. You're absolutely correct in that it is a complicated asset class. It's you have to know you have to really know your puts and calls and all of these other things, strike prices and whatever else. But it is definitely gaining momentum. So there's definitely, on the one hand there are retail companies that are providing a very easy to use solution, right, in terms of the actual platform that you're using to trade these options. Again, making it a lot more sort of layman's terminologies for traders to use. And then on the other hand, we just see that in the media, options trading is becoming more and more
Yeah,
prevalent. Um, so there is a lot more interest. We also, I think, have to remember that in the United States, and I think in some parts of Europe, equities trading, that was sort of the last boom that we saw the last, let's say, 3 years. There was a big boom in trading retail equities, right, and fractional share trading for stocks and things like that. And I think there was volatility in the stock market during COVID, which a lot of young people and young traders, investors took advantage of. Now we're sort of seeing, the S&P, in terms of the stock market performance, things are changing, and people are basically now looking for new, um, arguably higher risk opportunities. But again, they're looking to make a return quite quickly, right? So we're not holding carry trades. We want to basically trade intraday,
yeah,
for example, intraday options, and be able to generate a profit. So I think things are definitely moving in that direction, and a lot of the big name trading providers here that give you a plethora of products to trade all on one platform, like your Charles Schwabs and your Fidelities, and
takes
even
great.
interactive brokers and things like
Yeah.
that. They are all giving you the option to trade all of these different markets, many times all in the same account, and not having to switch one between the other. But that's really particularly in the United States right now. I can't really speak to
Mm.
individual countries or Europe as a whole at this point.
Well, I get the sense that this is going to proliferate around Europe. If the regulators allow it, to allow people to trade options, and options can be a hedging tool as much as a speculation tool.
Hmm.
And it should be treated as either, and perhaps more cautiously as a hedging tool, especially in volatile wild markets like this. Um, yeah, so I think options are going to be the new flavor of the year. I also, if we're talking about industry trends, I think I'm seeing more and more people moving to Dubai. I think Dubai is going to become a much more significant center of business for not just FX, but for multi-asset class brokers in general.
Hmm.
Um, there's certainly more client inquiries from Dubai that I'm seeing, and there's more liquidity providers moving to Dubai, um, but keeping maybe their presence in places like Cyprus. I think we're going to see perhaps more M&A activity in this space over the next 12 months. I mean, there was an announcement yesterday. Nor Capital bought House of Bourse in the UK. I think
Sure.
there's going to,
Yep.
interestingly, there's more traffic. We'll be seeing more traffic coming from the Middle East back into the UK market. People buying UK licenses as a quick way of getting a license in this market.
Hmm.
Um, and one thing that the last 2 or 3 weekends have been giving people a lot of sleepless nights in terms of the volatility. Waking up on a Monday morning, what's been decided over the weekend by the regulators? Now, are, are we going to see people offering more weekend trading? Um, to try and hedge their positions over the 48 hours that there currently is in a weekend. Again, little plug for what's coming out on Liquidity Finder. We've got an article coming out in the next few days on whether weekend trading, has a future, whether it will expand over time. I think with the 24-hour, 7-day a week, 365 days a year crypto market setting a kind of standard, I think there's possibly an inevitability that FX may move in that direction. If it kind of is released a little bit from the control of the major banks, if there are
Hmm.
non-bank market makers that can price over the weekend, then we may see eventually, it may not be this year, maybe not next year, certainly in the next few years, I think we might see FX trading over the weekend as well, as a result of all the kind of volatility there is in the market now. Yeah, so that's, I suppose, my little take on what might be coming up in 2023 and beyond.
It's great that you mentioned 20, let's say 24/7 trading. There's actually companies in our space, for example, like Tools for Brokers. I've spoken to them previously, and they have publicly announced previously. This was, I think, last year or maybe before that. They have some sort of solution for brokers that want to provide basically weekend trading. I'm not going to speak about which particular markets the solution caters to, but I know that it's something that is being discussed sort of in the hallways at the various conferences and expos that
Yeah,
we attend. And from things like from the equity side, there's companies in the U.S. like 24 Exchange, for example. They applied for an exchange license with the SEC in 2022 because they would like to basically launch 24/7 trading.
yeah,
I know that there have been certain delays in that because again, you're working directly with the regulator on something that has not existed before, right? We've never had an exchange that had 24/7 trading, and so I understand that there could be certain hoops that you need to jump through and wait for regulatory guidance, approval, whatever it is. But it seems like the industry overall globally is moving in that direction. I mean,
yeah.
I certainly would want an option to be able to execute a contract on a Saturday night if I felt like it.
Yeah, I mean, the problem is, once that genie is out of the bottle, it's going to be very difficult to put it back in again. If you see 7 day a week trading, then does that mean that the weekend is kind of dead for a lot of people? You know, I,
Sure.
I don't know. That there is that concern in the background, but on the other hand, crypto is 24/7, 365 days a year, and I think technology will make it easier for people to implement weekend trading. There are some companies, and you'll read about this in our article coming out soon, that facilitate weekend trading, but it's not widespread. The market is illiquid, and it's patchy. But I think with technology now catching up in the FX space, let's say catching up with the crypto space, we could see perhaps a wider availability of 7 day trading. And I know Dimitri's got plans for that, and it will be a game changer. But maybe the regulators are thinking, again, once this is out of the box, then it's never going to go back in there. So we've got to
Hmm.
tread very carefully down this path. And what do the existing exchanges make of it? Are they thinking of offering a 7 day a week service? I don't know.
Hmm.
It's a big deal. It's a really big deal, especially in terms of the equity markets. I think probably less so with the um, uh, FX markets, perhaps.
Hmm. Well,
But yeah,
we'll wait and see.
yeah,
Hmm.
interesting times. Interesting times.
For sure.
Yeah.
Before we finish up, Sam, I wanted to ask you a personal question. So your LinkedIn bio says that you speak French and Russian. I'm not sure in which proficiency, but I wanted to ask. I suspect that you studied French in university or school.
Still not in.
What about Russian?
Well, Russian, yeah, Russian. I've always loved the sound of the Russian language. Always, I suppose from first taste of it was watching James Bond films, perhaps, and feeling like the Russian being spoken there was actually true Russian, but I don't think it was. But it's always sounded a little bit sexy and just it's just magical sounding. So when I was coming up to going to university, and the wall was coming down, and it seemed like Russia was going to open up. It just seemed like a sensible thing to do to go and learn Russian language. And the first attempt at that was actually going and spending a month in Moscow with a family, and the mother of the household was a Russian teacher to foreign students, so I spent a month there.
Hmm.
And I went back to Moscow every year for a number of years until I ended up at Bloomberg, um, and in their emerging market sales department. And I was out in Moscow almost every other week,
Wow.
managing the Russian business for Bloomberg for a while, which was great. Got to see quite a lot of the size of life in Moscow and Russia in general, not just Moscow. And I've always been a big fan of Russia and the Russian sense of humor and Russian culture. And I always thought that England and or the UK and Russia were almost brothers and sisters, really. But things have gone mad recently. So
Right.
yeah, tragically gone mad, and it's a shame. But no, Russian language. I'd say I was semi-fluent, and I could almost think in Russian, which is a great thing to have. But unfortunately, I haven't had the opportunity for quite a while. But I just love the sound of it, and generally speaking, I love the people over there. It's just a sad thing that's happened recently.
That's awesome. Would you say you're more proficient in Russian than French in terms of foreign languages?
I probably used to be, but no, French is much easier for me to speak now.
Oh, I see. I
Yeah,
see.
I've always thought if I went back to Moscow for a couple of weeks, I'd get the momentum back again. It wouldn't be difficult to pick
Hmm.
it up, but I can certainly read it better than I can speak it.
Hmm. Hmm.
Um, yeah,
That's
just need a
cool.
bit more practice. But I'm over the worst of learning it, so it's just a question of being around speakers a bit more. You
Uh-huh.
speak Russian?
I do. Yes, I do. Because I learned it in school. I am an immigrant. I was born in Ukraine, and I was exposed more to the Russian language than Ukrainian at that point. It was the Soviet Union in the 80s when I was growing up. And I actually, interestingly enough, my family and I, we didn't know whether or not we would have to go back to whether it was, Soviet Union or just the separate republics or countries after the fall of the Soviet Union, but we weren't sure if we would need to go back. And so it was a decision made by my parents to continue actually learning Russian here in the States so that I wouldn't lose the language, because it would be easier for me to reassimilate back, quote unquote, back home if we were to move back, rather than, just immersing myself completely in English. Because as you can imagine, as a young boy or child, i- once you immerse yourself in a new culture and you're constantly located within it, right? You're hearing a language on TV spoken on the street and anywhere else. It's very easy to pick it up. So learning English was definitely not difficult at all. It was very easy. It was actually harder to
Maintain
maintain
Russian? Yeah,
maintain Russian, both from a speaking, reading, and let's say, cursive writing perspective. So I didn't have to go back, which was great, and I was able to continue learning Russian, up to a professional level. So today I can communicate in both English and Russian basically at a native level. I
yeah.
think I think that's, again, my opinion. you
Well, it's
know,
great. Great.
uh,
It's something you shouldn't lose. I mean, it's just one of those things. It's a very hard mountain to climb, and then it's easy to fall back down it and lose your fluency. So,
mhm.
keeping it maintained is great.
Yes,
Which I have.
and I think, Sam, for our personal communications or business communications that are not public, sort of on podcasts and things like that, if you'd like, I can freely communicate with you in Russian and help you sort of, you know what I mean, practice and maintain your proficiency if you'd like.
Отлично. Спасибо. Спасибо.
Хорошо,
Yeah.
хорошо.
Okay.
All right. Well, I think, Sam, I think that'll wrap it up for today. I
Yeah.
wanted to thank you for coming on and sharing your insights, really, about the general things happening in the markets, in the institutional FX space, retail FX space, and really giving us a lot of details on the new and improved Liquidity Finder. I want to tell everyone in our audience, if you haven't checked out Liquidity Finder yet, we recommend that you visit the site. It's very easy to sign up and just create a quick profile and start using a lot of the tools that Sam spoke about. Um, and Sam, we wanted to thank you as well. Wish you the best of luck in 2023. Hopefully, we'll see you at some industry events later on this year. And good luck with building out and growing liquidityfinder.com in the future.
Nikolai, thank you very much for having me. And it's, first of all, congratulations to anybody who's made it this far into the recording. Thank you very much for staying with us. And I hope you found it interesting. I'm always here for anybody to reach out to. There's a live chat on liquidityfinder.com. If anybody's got any questions they'd like to put to me directly, I'm usually at the other end of that in working hours. But I'd like to thank you again for the opportunity, Nikolai. And I think what you're doing with FinanceFeeds is fantastic. Keep it going. It's certainly picking up momentum. Happy to work with you on Liquidity Finder on that. So come and see FinanceFeeds on Liquidity Finder. Follow them there. And look forward to speaking to you again soon. Thank you very much.
I do as well. Thanks a lot, Sam. Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.